All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about HIVE Blockchain. They are a Bitcoin mining company. There seems to be a lot of confusion going on around what HIVE is doing and what it means. So I want to look big picture at HIVE Blockchain and what is in store for them. Hopefully, I can help clear up some of the confusion that's going on out there. According to our analytics, less than half of you guys watching are subscribed to the channel. So if you are interested in Bitcoin and Bitcoin mining content, please do us a favor and hit the subscribe button and the notification bell. Also, if everybody could smash the like button, that helps the channel out a lot. I would appreciate it. And in addition to that, in our pinned comment below, you will see a link to our free Discord. So you guys are welcome to come over. We mostly talk about Bitcoin and the Bitcoin miners on the Discord as well. So please join us. All right, let's talk about HIVE because there is some mass confusion going on right now. Their stock is taking a beating, and I want to look at some of the fundamentals of this company because I don't think the general investment community is understanding properly what exactly is going on here, and there's some misconceptions that I'd like to try to clear up, at least in my opinion. So let me run through what I think are the facts, and you guys can judge for yourself. All right, HIVE is trading at 85 cents right now, and I want to show everybody something because this is happening today, and I assume it's going to get fixed tomorrow, but almost every website I go to shows them with a $70 million market cap. That is not true. They have a $350 million market cap. What's happening is they're doing essentially a reverse stock split 5-to-1. So the number of shares has been adjusted on all these websites down to the approximately 80 million that it's going to be, but they haven't adjusted the stock up for the 5-to-1 split because technically it doesn't happen until tomorrow. So that's the first very confusing thing that's happening. I only found one website that showed the correct market cap, which is in the neighborhood of $350 million. Today's a holiday in Canada, so tomorrow they will adjust this, and I think everything will look correct at that point. But again, that's just more of a clerical error, but it seems to be across the board on all the major websites that I checked. HIVE, like all the Bitcoin miners, their stock has been beaten down over the last 6 months, and they're down significantly. When they announced this 5-to-1 reverse stock split, the stock took another big hit. People did not like that, and I understand why. And I have actually lived through a reverse stock split right here in the Bitcoin mining sector. I own shares of DigiHost, so DigiHost did a reverse stock split, and their stock has gone down considerably since then. You know, almost all the way back to where it was before they did the reverse stock split. And I think that people are afraid that the same exact thing is going to happen to HIVE. I'm going to explain to you why I think HIVE is going to take a hit in the short term on their stock price, but that is not going to happen to HIVE. They have a very, very different equation than DigiHost did. Okay, I want to start off by quickly showing you their April mining and operations update because I want you to see where they're at as a company. So 35% of their revenue is in Ethereum, and they typically tend to sell that for cash for operations and for growth, and the rest of their mining is directly in Bitcoin mining. So that's the majority of their mining, but not all of their mining, and they are hodling their Bitcoin at this point. So you'll see one of the things that I'm going to argue, or one of the things I'd like to point out, is I'm going to show you they have an extremely strong balance sheet. So that's a part of the valuation process that I'm looking at that tells me this stock is not going to plummet as far as people think it is, even if it takes a hit in the short term, which I do think it's going to. So it may get worse before it gets better, but I'm giving you the long-term scenario. There are a lot of people that think that this is a death blow to HIVE and they're going out of business and they're going to run out of money. And I'm just going to show you a picture where, in my opinion, that is not what I see at all from what's going on in HIVE operationally. A company's stock can act different than its operations. There are many examples right now of companies that are doing very well operationally and their stocks are doing poorly. The first thing is 458.3 Bitcoin equivalent produced. That is third best in the entire industry of 20 plus publicly traded Bitcoin mining companies. Only Core Scientific and Riot Blockchain mine more cryptocurrency than HIVE Blockchain. That was about 15.3 Bitcoin per day. They are currently at 3.4 exahash of BTC equivalents because remember, some of what they mine is Ethereum, so they do a conversion to what the equivalent hash rate would be in total. 3.4 exahash is among the top 5 right now in overall Bitcoin miners, and you can see they're highly efficient because they place third overall in the amount of cryptocurrency they mine. So this is an extremely efficient business from an operational standpoint. So this company is growing. They have grown quite a bit. They continue to grow. Inside of that growth, they continue to be highly efficient operationally. Okay, I want to look at their most recent financial statements, and I will tell you, these are December 31st, 2021 financial statements. I am waiting. They have not put out their March 31st, 2021 financial statements, so that would be very helpful if we could get a look at those. So for now, what we'll do is go with these financial statements, and again, these will be updated hopefully soon. Revenue was $68 million. And you'll see down here they show gross mining margin was 90% in that quarter. Now that will go down because Bitcoin has come down quite a bit from there. So this 90% is going to go down to maybe 85 or 80%, but that's still a massive margin. And then their gross margin overall, which includes the depreciation, was about 68%. So very profitable company. I'm going to take from here and I'm going to go to a sheet that I put together to try to show the cash flow of this company. This is a summary of the financial statements we were just looking at. So you can see revenue of $68 million. So what I went through, I pulled out all of the actual cash items on their income statement. There are a lot of non-cash transactions on their income statement. There's a massive amount of confusion on the income statement. But what I'm boiling this down to is here's where the cash is. So if this company is to survive, they need to be cash flow positive. And even if they're actually losing money on paper, what we're looking at is, can they make it through a crypto winter? Can they make it through this reverse stock split? So I'm going to go through where I believe the numbers are at. So that's the perspective I'm looking at. This is a survival case scenario. So we saw their direct mining costs were $6.5 million. Those were their actual cash costs of running their operations, the machines, energy, etc. So those are real dollars. Those are cash costs. In addition to that, they have overhead costs of $2.8 million. That does not include non-cash compensation. So again, this is a situation where the financial statements will look worse, but the actual cash flow of the company, which is what they're managing, does not change through stock-based compensation. And I know many of you have other issues with the stock-based compensation, and that is a separate story, but right now I'm just looking at cash flow of this company. The other thing on their income statement is they do have some debt, so there's interest paid. So that's real money. So that's cash that they have to pay out, and that was $1.3 million. So the total of all their cash expenses in the quarter ended December 31st, 2021 was about $10.7 million. On revenue of $68 million, that leaves about $57 million of cash flow. Now, they don't convert 100% of their cryptocurrency to cash. So when I say cash flow, I'm using that term loosely. Again, what I'm trying to go through is a scenario where if they had to, this could have been their cash flow, and if they need to going forward, they can sell the cryptocurrency that they mine in order to survive. So again, this is all about a worst case scenario. Are these guys going out of business? Is this stock going to zero? Because that is a big argument right now on the street. Everybody is extremely bearish on Hive. More so, I think, than any other Bitcoin miner at this time. So I'm going to show you what I call a worst case scenario that I put together. Now, I want everybody to be clear. The worst case scenario for every company in the stock market is that something absolutely unforeseen happens and it's catastrophic and the stock goes to zero and the company goes out of business. So obviously you can't calculate that scenario. What I've tried to put together is a scenario that I think is overly bearish, that I don't even think could exist. So to me, this is what I think a worst case scenario would look like for them. So I want to show you that. Basically what I did to create this worst case scenario, and this is very generic, but again, you guys can decide if you think there's a scenario that would be even worse than this that's realistic. So picture whatever you want within reason going wrong, and this is what I've come up with. So I'm saying revenue down 50%. So if we're in a crypto winter, the price of cryptocurrencies is down. So let's say it's down drastically. So to me, that's an unrealistic expectation, but that's what I'm using. I'm going to cut their revenue in half. Essentially, the cost of mining, I'm going to double. I'm going to say that goes up 100%. And let's just assume that for whatever reason, be it the cost of energy or the difficulty level of the network, then I'm going to say their overhead doubles. And I'm going to do that just because there really is no line of reasoning where in this scenario their overhead would double, but we're talking worst case scenario, so just because we're going to double their overhead. Then I'm going to say interest is going to double, so interest is going to go up 100%. Let's say they borrow more money against future equipment, and so therefore there's higher interest expense, and we'll say that doubles as well. So to me, this is an unreasonably bearish case. So you guys have to make that decision. That is absolutely subjective. I think this scenario is ridiculous. So if we look at what happens in this scenario, you'll see the revenue goes to $34 million. The direct cost of mining goes to $13 million. The overhead 5.7, the interest 2.6. So now total cash expense is $20 $21.5 million. Well, revenue is still $34 million, so even in this, what I consider a ridiculously low case scenario, if they were to sell their cryptocurrency as they got it in order to maintain cash flows, and again, this is to fend off going out of business. So if they needed to do that, they could generate $34 million in cash in this scenario, which would leave them cash flow positive for the quarter, $12.6 million. So you can see, even in the case that I've drawn up that I don't think makes any sense, they would still be cash flow positive. That's how good the margins are for this company from an operational basis. So I don't believe this is a reasonable scenario. However, anything can happen. So there's lots of different scenarios that I'm not going to get into that could cause some part of these things to happen. So even if these were to all happen, they would still be cash flow positive. I'm going to look at their total liabilities, both current and every single dollar of every single loan that they own. That totals $55 million. So again, they have $268 million liquid dollars. Even if those were to take a hit from cryptocurrency winter, they only owe $55 million in liabilities, including all the loans they own. There's one more thing I'm going to add to that number. And if you look in the notes to the financial statements, you'll see obligations on mining equipment. The company has purchased commitments of $32,603,000. So this is another $32 million they've already committed to spending in order to get to the exahash rate numbers that they've talked about. So we're going to assume that they go ahead and spend this money. So in that scenario, they have to spend $55 million if they were to pay off all their debts, short-term and long-term, $32 million to get the rest of the equipment that they've already ordered. So that's $87 million of total liabilities, no matter which way you slice it. That's against what is currently $268 million of current assets. The book value of this company is over $400 million. So in order for Hive to trade back down to $1 after the reverse stock split, the market cap of this company would have to go down to $80 million. So right now the book value is $400 million. Their current asset value is $268 million. So their market cap would have to go down to $80 million for them to reduce all the way back down to $1 after the reverse stock split. I just don't think that is a reasonable case scenario. Based on what we looked at, they can pay all their bills, they can pay all their future obligations, and even if we go into a crypto winter, in my scenario, they're still cash flow positive. So again, please remember, this is not financial advice. I've put together this scenario. I've made assumptions. I've shown you the assumptions. You can do the same thing and just switch out your assumptions and see if you come up with a scenario where you think maybe, they don't survive. I was not able to come up with one within reason. So I just want to look at the chart very quickly. I'm not going to make price predictions, but what I am going to do is say this. Hive is now down 84% from its all-time high back in November of 2021. More importantly, they're down 62% from their highs of just 2 months ago in March of 2022. So that's a 62% hit to their stock in the last 2 months, after it was already down substantially off of its all-time highs. So this stock has been beaten down pretty soundly. It's already beaten down lower than its book value. I don't know when this stock bottoms out, so I'm definitely not recommending you buy or sell this stock. But I guess my main theme here would be that, a lot of people are worried that Hive, I hear a lot of comments, this is a junk stock, they're going out of business, etc., etc. So I've kind of presented a counterpoint here why I don't believe those things are true. I think that Hive is going to make it over the long term. Obviously, management has to make some of the right decisions in the middle, and nothing is a certainty. So again, please be very careful when investing in Hive or any of the other Bitcoin mining stocks. They are all down drastically, and nobody really knows where the actual bottom is. So, not financial advice. Please do your own due diligence with these highly volatile stocks. So those are my thoughts on Hive and Hive Blockchain and why I think they are going to survive through all this, even though this is a very tumultuous time for them at the moment. So if you made it this far, please remember to subscribe to the channel and smash the like button. Thank you so much for watching, and drop your comments down below as to whether you think this argument makes sense or not, or what you think is going to happen with Hive going forward. Are you buying Hive? Are you selling Hive? So let us know. Thanks again, and we'll see you in the next video.